Welcome to The Explainer. The financial world is going through its biggest shakeup in, well, decades. So today, we're going to break down Monaco, a project that's building the absolute core infrastructure for this new future of finance. All right, let's just jump right in with a massive number. $30 trillion? That's the projection for the tokenized asset market by 2034. And we're not just talking about crypto here. We're talking about everything. Stocks, real estate, you name it, all living on a blockchain. And look, this isn't some niche, fringe idea. We're talking about titans of the industry. People like Larry Fink, the CEO of BlackRock. He sees this as the inevitable future for all markets. A future where everything happens in seconds, not days. It's a total game changer. So, this huge shift, it's got a name. The Great On-Chain Migration. And let's be clear, this is way more than just a trend. It's a fundamental rewiring of how value moves around the planet. So what does that actually mean? It means capital is pouring into this new 24/7 financial system. Traders want to react to news the second it breaks, not wait for some opening bell on a Monday morning. But here's the catch, the really big problem. The plumbing, the infrastructure holding it all up, it's ancient. So you might be asking, why can't the old system just, adapt? Well, the short answer is it can't. It is fundamentally broken for this new, always-on world. It was built for a totally different time. And believe me, the cracks are really starting to show. And this is where you can really see the clash. On one hand, you've got the old way, right? Markets that close, settlement that takes over a day, that's the whole T+1 thing, and these murky revenue models like payment for order flow. Then, on the other hand, you have what the on-chain world demands, a system that never sleeps, settles instantly, and is completely transparent. These two things, they just can't coexist. You see, this isn't just about being slow. The old system is inefficient by design. Your capital gets locked up, just sitting there in settlement limbo. And those models, like payment for order flow, they can actually put your broker's profits ahead of getting you the best price. The whole thing is just begging to be disrupted. Okay, so this is the exact problem that a project called Monaco was built to solve. Think of it as the foundational trading layer for this new decentralized Wall Street we've been talking about. So what is it, really? In the simplest terms, Monaco is the core trading engine, the thing that matches buyers and sellers. It's a central limit order book, which is the same high-performance tech that the New York Stock Exchange and NASDAQ use. The key difference? It's built to be completely open and accessible for anyone to build on.
All right, let's quickly remember that old speed limit. We're talking T+1 settlement. That means your trade takes more than a whole day to actually finalize. A whole day!
Okay, now look at this. Monaco's execution speed. We're talking less than 1 millisecond to match a buyer and seller. That is, and I mean this literally, faster than you can blink your eye. It's the same speed as the world's top stock exchanges. So let's really put that into perspective for a second. When you combine that sub-millisecond execution with nearly instant settlement on the blockchain, you get a system that is, wait for it, over 200,000 times faster than the old way. That's not an improvement, that's a revolution. But you know what? It's not just about being ridiculously fast. It's built on a totally different philosophy. It's permissionless, which means anybody can build on it, no questions asked. It actually shares revenue with the people who build on it. And, critically, it pulls all that trading activity into one deep, shared source of liquidity. So how in the world does Monaco pull all this off? Well, it really comes down to two key ingredients in its quote-unquote secret sauce, something called shared liquidity and a really clever new incentive model called Pit Pass. First up, shared liquidity. See, in the old world, if you built a new trading app, you had to start from scratch. An empty order book. It's a nightmare trying to find buyers and sellers. But with Monaco, any new app just plugs right into this one giant unified pool of liquidity. Instantly, their users get great prices and tight spreads from day one. And then there's the second ingredient, Pit Pass. This thing completely flips the script on that really controversial model, payment for order flow. Instead of these shady backroom deals that help out big brokers, PitPass just transparently shares revenue with the apps that bring in the trading volume. And the best part? It does it all while making sure the trader always gets the best possible price. Okay, so when you put these pieces together, the insane speed, that shared liquidity, and a fair revenue model, you get something really powerful. You get a self-reinforcing cycle that's just designed for explosive growth. And this right here is that flywheel effect in action. It's pretty simple, really. More apps build on Monaco. This creates deeper liquidity. Deeper liquidity means better prices for everyone. And what do better prices do? They attract more traders and even more apps that want a piece of the action. It just feeds itself. It's a classic virtuous cycle. So, at the end of the day, the vision here isn't just to make a faster stock market. No, it's about tearing down the old system and rebuilding it from the ground up to be more fair, more transparent, and more open. It's about putting individual traders and developers on the exact same footing as the biggest institutions in the world. And that really just leaves us with one final thought. As all those trillions of dollars we talked about inevitably move on chain, the question isn't if Wall Street is going to be rebuilt. It's what will that new foundation look like? And projects like Monaco are making a really compelling case that it's going to be faster, more open, and way more decentralized than anything we've ever seen before.